Hey there, traders. Welcome back to today's podcast. I've got a special guest on the line, somebody that I've looked up to for many, many years, and it's a true honor to have him on today, Tom Sosnoff. He is the CEO and founder of tastytrade. Tom, seriously, thank you so much for coming on the show today.
This is the How to Trade Stocks and Options podcast brought to you by 10MinuteStockTrader.com, where we give you the tools, tips, and tricks to help you trade faster and trade smarter. And here's your host, voted one of the top 100 people in finance by Redwood Media Group, founder and head trader of 10MinuteStockTrader.com, Christopher Ewell.
Chris, happy to be back.
Oh man, this is a real pleasure. Tom has been highly influential in my life and potentially yours as well with the work that he does with tastytrade and also with Tastyworks, and that's the brokerage platform that I use as well. Tom, I really wanted to get your opinion, right? The market, since the coronavirus and everything else has started, has been short of crazy compared to anything that I've seen. Now, granted, I know you've traded for just maybe 1 or 2 years more than I have, and I know you've seen crazy moves like this. What was it like for you? How did you trade it? What did you do with all that was going on out there?
Well, I've traded in the 1929 crash. I feel like that's what people ask me. Hey, did you trade in 1929? And no, but I did. I was on the trading floor all day of the 1987 crash, and then the meltdown in 2000, 2001, and then obviously 2008, and then what we just experienced now. So I've been through a lot of whatever you want to call, like however you want to define these crashes and stuff, and mini crashes and flash crashes. I feel like I've seen them all. I have to put this one. I have to put this one right up there with the most difficult of all trades. So it's right up there at the top of the list for, I think, one of the most difficult, just because the amount of movement on a daily basis for about for about 5.5 weeks straight was unprecedented.
Yeah, exactly. I mean, for me, it was February 27th. I got stopped out of one of my positions, and I was looking at it like, okay, let me try and put something on. And that one also got stopped out about 40 minutes later, and I was like, this is weird. So I just kind of took the rest of the day off. And then the next day it came in, I think that was the first lock limit down day. And I'm like, whoa, what just happened here? And then it was just roller coaster rides of limit up and limit down. And I couldn't imagine trying to hold anything over that period. What was it like for you? It was
well, I was very so I'd been getting short towards the end of 2019, pretty aggressively in November and December, because I felt the market was ridiculously overbought, and not that I'm ever right when I think that, but what I felt was the pot odds, meaning that the down move would be significantly more violent than the up move, which was the right way to think, and ultimately that's what happened. The problem was that after the market sold off from 3,400 to, let's say, 3,000 or 2,900 in that range, I kind of felt like, based on what we had experienced over the last decade, that was probably the best we're going to see is, 10, 12, maybe 14% type correction. So I kind of flattened out those levels and started to sell some premium, and obviously I was way too early. So the move for me, although it started out great, the first 300 points of the S&P decline, the actual move itself, I did not make money on. I was a net loser by the time we got down to by the time we got down to 22 or 2,300, just because I got caught short a lot of premium. I didn't get hurt. I just lost money. We made it back on the recent volatility crash on the way back up, which is crazier. But those two moves together were about as violent as far as magnitude of anything that I've ever experienced. And I like I said, I go back to before the 87 crash. So of trading, very aggressively. And I traded aggressively during this entire move. I was very aggressive. Well, I didn't.
Right. So did you spread off your trades, or did you just keep them as naked positions?
No, all my positions were theoretically naked, but I had, like, if I was short puts, I was short calls against them. So there wasn't just like, if I was short calls, I was short puts against them. So there wasn't a situation where I was just naked short puts or naked short volatility or something like that. But by being short calls against short puts, with vol expanding the way it did, it doesn't really help you. You know what I mean? Like if you're short puts and the market starts going down the way it was, short calls don't really make you any money. They just protect you delta wise, but they don't really make any money. So because the calls don't really move and the volatility expands and the calls get richer faster, the puts get rich way juicier faster than the calls come down. So it's a delta hedge and that's it. It didn't work.
Okay. So were you initially neutral when you were saying you were at the end of 2019? Were you selling more calls than puts?
No, I was very short at the end of 2019.
Okay.
And all the way into February and March, I was short. The problem was that my deltas got eaten up into that down move towards the beginning of March and into the middle of March, and my deltas disappeared, obviously. And then, you end up being a little bit long and you don't like it and you got this volatility expansion. And so then you take a little bit of a hit and then you hope the volatility contracts, which it did. And then you did say, oh my God, I just did all that work for nothing. It's, it was a great scratch type of thing.
Yeah.
Yeah, but it's okay. Listen, that's what trading is. You get an outlier event every 10, 12, 14 years. This case, every 13 years. If you go back to 1980, we've had 3 legit outlier events: 87, 2008, and 2020. And those are the real outliers. Not those are the times when vol jumped up into the 80 handle. And you have to look at those and go 3 times in 40 years. Okay, I can deal with that. And if you go back and look at the number of times volatility has exceeded 40 in the last 30 years, it's only 5 times. So you look at it and say, okay, that's part of the game. Every once in a while, the vol gods win.
Right. So when you were saying that we finally bottomed out and you started selling premium and you were able to make some money back on the premium crush, were you at that point, delta neutral, or were you doing more one side or the other? I mean, because we just came off this giant down move.
I mean, we were trying to be delta neutral, but the reality is when you're moving 2 standard deviations a day, which we did 76% of the time, and during that 5-week cycle, we moved 2 standard deviations a day. You can sit here and say, I wanted to be delta neutral, but if you're short premium, you're only delta neutral for about 15 minutes. And positions move. So, we tried our best and, we did the best we could to stay relatively neutral, but it was almost impossible.
So were you, I know this is not necessarily your style of trading, but were you looking at any charts to get any sense of like, maybe this is a bottom, maybe this is, some people call it support, nothing? Okay.
No chance.
Okay. No, just thought I'd ask. You never know.
No, we're just trading them up, and listen, we feel through option prices kind of what we think is happening. And again, nobody knows. That was a classic move where I don't care if you were a technician, you were a cyclical analyst, you were fundamental, you were just a tape reader. I mean, nobody stood a chance. I mean, you can't, there's nothing that you can see when you're getting moves of 2 and 3 standard, and even some days 4 and 5 standard deviations. There's nothing there to see. Like it's not something that you can you can't draw a line. It doesn't help you.
So did you ever take a step back and say, I'm just going to let this play out and just kind of watch? No, not at all.
No, it's not. Wow. No, that can't be. That's not what we do. So no, if the doors are open, if we're open, we're playing.
Yeah. Interesting. Okay. Very cool. So, when all this was going on, that was my first thought is like, what are the people who are selling options? What's happening to them? What's happening to their portfolio? Because like I said, I took a step back. Once the bottom started to form, that's when I started to get in. I sold so many put spreads. I mean, April was my best month ever. And it just worked out great. We had a lot of, vertical moves combined with all the premium getting crushed, and it just worked out really well for me.
Yeah. It's a good thing that you could step away and do that. We don't, it's not really in my blood to be able to step away, because then it's hard for me to get back. So I always have to keep playing.
Yeah, that makes sense. I mean, you got to have a feel of the market too, like you've done for plenty of years. Just having a position on and seeing what's happening to that gives you so much more information than watching from the sidelines, I think.
Yeah, no, you have to have a certain you have to have a little bit of emotional skin in the game, and you have to have a little bit of monetary skin in the game, because then all of a sudden the game's real and it has a different, it impacts you differently. So sure.
Yeah, that makes a lot of sense. So, what would you say to the listeners out there who are, they just saw this huge rise back, and I think the Nasdaq was in positive territory earlier this week, if not still is right now. What would you say to them? Right? Is everything cool now? Or back to business, or hold tight?
Well, I don't think everything's cool. I think, I think people that think everything's cool, that's, you're living in la la land. I think you saw today, Vol jumped almost 20%, not quite 20%, but 18% this afternoon alone. And the Nasdaq futures dropped, 300 points today off of their highs. That's not everything's cool. I mean, I think we got a little complacent in the last couple of weeks, and everybody was trying to make it seem like everything's cool, but there was a huge disconnect between what we call the eye test and what we're seeing, high unemployment and people scared for their lives, along with the stock market that just had a giant disconnect. And I think that, in fairness, when you get that kind of a disconnect between Main Street and Wall Street, it's a little, you don't really get it, and you're almost not supposed to get it, because the market's the totality of all these different opinions and things like that. And I think the market got too oversold on the way down, and I think it just got too overbought on the way back up. So do I think we're going to go back and test those lows? No. Do I think we're going to crash? No, I don't. Do I think we've seen the worst in implied volatility? Yeah, I do think we've already seen the worst. But does that mean we can't have an ugly little sell-off here? And the answer is, of course we can.
Yeah, absolutely. So, all right. So you use the Tastyworks platform. This is something that you developed for years and years to work on. And as soon as it was available that I could jump on it, I certainly did. And I had heard that there are a few new updates and new upgrades that have come out recently. Could you tell us more about that?
Well, we made a pretty big release this morning. We're getting very aggressive now, because we've spent the last 3 years making sure the platform is the fastest and most stable in the whole industry. Like, we've really focused this time. When we built Thinkorswim 20 years ago, our focus was on features and ideas and concepts about what a retail trading platform should look like. And it was a great platform, but it's old, and it was a legacy platform, and it was very slow. Tastyworks is nothing like that. It's very fast. It's very compact. It's very stable. As you know, we're the only platform that didn't have any issues whatsoever during that entire move. And now we're starting to add a bunch of features, but we're not going to bloat the platform. Today we added a pairs trader, which is cool if you want to trade stocks or futures, one against the other. Remember, we're launching our own futures exchange in about another 10 days called the Small Exchange. And so we're very excited about that. We want to make sure we had all the features on the platform. We rolled out some implied volatility rank on our charts. We rolled out a futures, the ability to do futures calendar spreads with a single click, so that you can roll your futures on the platform now. It's stuff we had to have. We're introducing a new charting package in the next couple of weeks. We're introducing lots of new option tracking mechanics and option tracking features, so you can track positions, you can group them together and track things like that. So we got a ton of features coming out in 2020. I mean, it wasn't our game plan, Chris, that we would be all working from home.
All right.
So it's weird, but we're pulling it off.
Yeah, with that being said, I work a lot in corporate finance, and I feel very, very fortunate that I've been able to continue to work from home. My kids are home; they're doing online learning, and I've become a preschool teacher all of a sudden. And then I have a 8-year-old and a 5-year-old. He'll be starting kindergarten in the fall. My wife is an educator; she teaches 5th grade. And so she handles the bigger one. I handle the little one because I don't know what I'm doing, right? I mean, with his stuff, it's like circle the things that start with X and stuff. That's on my level. I can handle that kind of teaching.
I like it.
But yeah, it has been a crazy, I mean, first half of the year. And, you know, I live in the Dallas area, and I look very frequently like, okay, are things getting better? And they've opened up most of everything here in Texas. And my thought was, things aren't getting better. Why are we opening? What is this about? So who knows how long this could be?
The thought process is almost we're you know, we're a country that doesn't like to be told what we can and can't do. But again, you got to remember, most of the world, you know, you can go look at Italy and Spain. They don't like to be told what they can do either. You know, we're not the only place that thinks that way. And we're also kind of a culture where, all right, well, if everybody else is out there, then, you know, everything must be fine type of mentality.
Right.
Chicago's basically still on lockdown. You know, I mean, it really just depends. And people are pretty much, you know, they're pretty much sticking to the, you know, the whole lockdown, basically the whole lockdown mentality. And so I think just in different parts of the country, there's just, you know, and listen, I understand. I'm able to work from home. If I wasn't able to work from home, I'd be going crazy trying to get back to work.
Yeah. And, you know, with Tastyworks and Tastytrade, I mean, you've basically built a technology company that happens to do financial entertainment, education-tainment. And
we're definitely we're a software development company. We have three aspects to what we do. We're software development, we're production, and then obviously, you know, we support, you know, multiple business brokerage firms and things like that. But at the core of what we do, you know, is our content. We're a think tank with production facilities, and then we're a software event. You know, we're a software dev firm.
Mm-hmm. Yeah, it makes a lot of sense. So tell me more about the small exchange. I've heard of it. I don't know all the details about it though.
The small exchange is something that for about the last almost 20 years, I've had this idea that the futures marketplace, the products are too big for retail investors. And I love the capital efficiency of futures, but I hate the notional size of the products. And I also don't like the fact that the exchanges are not standardized. So it's complicated for individual investors to trade, you know, futures products. The main advantage to them is that they're capital efficient, and that's it. So for the last 15 years, I've been designing what we call in addition to the other stuff we do, which is building brokerage firms and building technology, I've wanted to design futures products. And so I went around to all the exchanges and said, hey, I've built this really great idea for an exchange, you know, for products. And they're all like, you know what, Tom, we love the idea too, but no thanks. We love the idea, but no thanks. Everybody said the same thing. Love the idea, but, you know, we don't want to piss off our members, we don't want to piss off all the members. And you know, this has too much of, you know, it's too retail for us. And so finally I was like, screw it. I'm going to build it myself. And, you know, we went out, we put up our own money, we raised a little capital, and we are the first new futures exchange that's been approved by the CFTC in the last 30 years.
Wow.
And so the small exchange is a new futures exchange. It's been approved by the regulators. It is going to clear through OCC just like the options exchanges and everything else do. And we are launching with 5 products: crude oil, currencies, not crude oil, but oil. We call it global oil. It's a mixture of a bunch of things. They're like, think of it like ETFs, mm-hmm. futures that act like ETFs, like $50 or $60 stocks that only require, let's say, $400 to hold them overnight. Okay. So instead of putting up $5,000, you put up $400. It's virtually, they act the same way. There's a stock, a bond, a currency, a crude oil, and a precious metal.
Okay. So that's what I was thinking was when you were describing that, is it's going from like, let's call it 100 lot of something down to like a 10 lot or a 1 lot, something
exactly.
along those lines. Okay.
Do you trade any futures at all?
No, not yet.
Okay, so the CME has their regular products, which are their E-minis, and then they have, for example, they have a micro product. So when we announced the small exchange, they announced micros because they didn't want to let us, I mean, it took us to build that for them to step in and create a product. So all right, whatever, they copied us, who cares? But our products are about half the size of the micros. So
wow.
the average move, just so you see. Today, the small exchange future, which is the small 75, which is our stock future, it moved a little less than $100. And the E-mini S&P, just one lot, the E-mini S&P today, one contract moved $4,000.
Wow.
And one of the micros moved $400, and our product moved $100. So for a small retail investor, it's a $100 move with incredible capital efficiency. And so you put up $400 and you could make or lose $100. It's a nice little hedging vehicle. Stocks have become very expensive, but capital efficient futures are not. And that's what we built.
Okay. That makes a lot of sense. Thank you, honestly, for going and going through all that with me. Because I'd heard about the small exchange for a couple of years, and I was like, what's the point? Right? I didn't get it, but now that makes a lot of sense when you explain it.
You are going to love it. You're going to be an addict, okay?
Okay. Yeah, I gotcha.
This is crack for traders.
So can you trade that on any platform, or is that exclusive to Tastyworks?
No, it will be on lots of platforms, but not every platform. Initially, it'll be on Tastyworks. It'll be on E-Trade. It'll be on Interactive Brokers. And it'll be on a bunch of different futures platforms like Trading Technologies and CQG and a lot of the futures platforms. It is not yet on Schwab or TD. And I don't know if Fidelity even offers futures, and it'll be on a few other global platforms.
Okay, cool. Wow, that sounds really interesting. I certainly will be lighting one up every once in a while just to check it out, right? Because when you're going from something that's, you were saying, a $4,000 move to a $100 move, it's a lot easier to kind of dip your toe in, like we were talking about earlier, and try and test the waters there. Okay, cool.
It's the same thing as it would be the equivalent of buying 100 shares of stock, but instead of putting up $5,000, let's say you wanted to buy 100 shares of oil, just as an example. Like so you want to buy, well, you wouldn't buy USO. Well, actually, yeah, USO is a $21 stock, let's just say, and it's a physical oil product. So to buy 100 shares costs $2,100. Mm-hmm. To buy the equivalent on the small exchange, or something that acts just like it. Like, just to give you an idea, I'll take a look at what our crude oil did today. So our global oil today was up 42 cents. So on a one lot, that's $42. And USO, because crude oil today, this is really interesting. Like, this shows you how cool these futures are. Today, crude oil was up 78 cents. So our product was up $40. That makes sense. It followed crude oil. USO, which is a physical ETF, was down 20 cents. So if you put up $2,000 to buy 100 shares of USO, you lost $20. If you put up $400 to buy one contract of the small exchange global oil, you made $40.
Huh. Okay.
And so it has a higher correlation. Yeah. It has tracking, and it's much more capital efficient. And I think small retail investors are going to love it. And the exchange fees are fractions of what the CME and the ICE charge. So gotcha. We don't charge for data. So like we're not. This is a completely different customer exchange. And by the way, we don't own the whole thing. It was just our idea, my idea, and it was and we're the like the founders and that we kind of created it. But Peak Six, and which is a prop firm in Chicago, a big prop firm in Chicago, Citadel, which is the largest market making firm in the world, and Jump, which is the largest futures market making firm in the world. They're all investors. So there's some big players involved.
Gotcha. Wow. Super interesting. Okay. So if people want to learn more about Tastyworks, I've got a special offer for you to go along with everything that Tom was saying, right? Everything is still there, but this is in addition to from what I can provide for you. And if you go to trytastyworks.com, You can see all the details there and get started today. So that's trytastyworks.com to learn more about the bonuses that I can give you when you open a new account with Tastyworks and to take advantage of all those benefits that Tom was talking about there. So Tom, now I have to ask, does your oil ETF go negative?
That's not. You mean our oil future? Our oil future.
Yes. Yeah.
It cannot go negative. And our futures are all cash settled. So they settle to cash. There's no delivery.
Gotcha. Okay.
So the problem, remember, crude oil cannot go negative. Theoretically, crude oil cannot go negative either. But there are certain market structure issues with storage on expiration only. And that was a very strange, I doubt you will ever see it again type of scenario with crude oil going negative for one day. One day just for a mark, because there was large open interest and there was, none of the platforms could support negative prices. So it was a complete, cluster, what. Yeah. But I don't think you'll ever see that again. And, that was a market structure issue with the actual crude oil future. Ours are cash settled. There's no delivery.
Gotcha. Okay. Well, that was definitely on my mind as you were discussing this. Like, oh, can it go negative? Who knew that could happen?
No, it can't go negative.
Well, Tom, this has been a real pleasure. I have learned so much and really had I feel so much appreciation to be able to chat with you and have you back on the podcast again. Thank you for your time, really.
Chris, anytime, man. You're a pleasure to work with anytime you want. And thanks for the great support for Tastyworks and tastytrade. And you stay safe. You stay safe, okay?
You do the same. And you guys stay safe out there as well. And thank you so much for tuning in to today's podcast. Make sure you like, subscribe, and enable notifications. And make sure you go to trytastyworks.com. That way you never miss any of the tools, tips, and tricks we upload every single week to help you trade faster and trade smarter. And I'll see you on the next episode.
10MinuteStockTrader.com content is for information and educational purposes only. It is not, nor is it intended to be, trading or investment advice or recommendation that any security, futures contract, options contract, transaction, or other financial instrument or strategy is suitable for any person. Trading securities can involve high risk and the potential for total loss of any funds invested. 10MinuteStockTrader.com and Christopher Uhl, through its content, financial programming, or otherwise, does not provide investment or financial advice or make investment recommendations. Investment information provided may not be suitable for all investors and is provided without respect to the individual investors and audience's financial sophistication, financial situation, investing time horizon, or risk tolerance. 10MinuteStockTrader.com and Christopher Uhl are not in the business of trading securities trades, nor does it direct client commodity accounts or give commodity trading advice tailored to any particular client situation or investment objectives. 10MinuteStockTrader.com and Christopher Uhl are not licensed financial advisors, registered investment advisors, or registered broker-dealers. Stocks, options, futures options, and other financial instruments not included here involve risk and are not suitable for all investors. You alone are responsible for making your investment and financial trading decisions, and for evaluating the merits and risks associated with the use of any financial security and broker platform. For more information, please visit 10MinuteStockTrader.com/legal. And thanks for stopping by.